Welcome to QAV America. Tony, this is episode 40. For brand new listeners, welcome. This is a show where we talk about value investing in the US markets. You might notice from our accent that we are not Americans. We are Australian value investors that have been doing a podcast about value investing in Australia for many years. And these days we do also do one about the American market because why not? And it's been an interesting week, Tony, in the American markets. Ford reported their worst quarterly earnings in 4 years on Tuesday and a net loss of $8.2 billion for 2025. What's $8.2 billion between friends, Tony?
Is this part of the great EV write-down I've been reading about? All the EV manufacturers are getting back into producing V8 muscle cars again.
Yeah, drill, baby, drill.
Yeah.
Yes.
Yeah, there's a lot of companies writing down their EV investments.
This is
writing off the EV investments.
Yeah, this is their largest loss since the 2008 recession. At least $4.8 billion of it was due to the EV division.
Yeah, right.
Article I've got says electric vehicle sales were battered and previous corporate plans were shattered. Oh, look at that. That's nice.
Battered and shattered.
Battered and shattered.
Yeah.
Across the industry this year, following the
how I like my fish and chips.
Following the Trump administration's push to slash a $7,500 federal EV tax credit that was signed into law by former President Biden in 2022. Ford was one of many automakers committed to an electrified future that was hit hard by the decision. In response, the company said that it will pivot from full electrification to partial electrification, and in December announced a major scale back of its electric vehicle plans, which included killing the electric pickup truck F-150 Lightning. I think the customer has spoken. That's the punchline, Ford CEO Jim Farley said in an earnings call on Tuesday. I think Donald Trump has spoken more than the customer.
Yeah, I agree. Well, hasn't there been a wind back of tax credits as well for EV cars? So in a way, the customer has spoken because they're not buying EVs unless they get a tax rebate for it.
Yeah.
Yeah.
In the absence of a tax credit, Ford and other automakers such as GM are betting on two things to spur customer demand in the US: affordability and autonomous driving. At the core of that plan is a $30,000 electric vehicle with eyes-off driving that Ford plans to unveil in 2028.
Oh, my God. Like, we'll pivot to EVs. We'll pivot back to Hemis. We'll pivot to driverless cars. It's like...
Well, they got to do something.
If it's their own money, would they be doing that?
Well...
It's shareholder money. Sure, $8 billion. What's $8 billion?
What's $8 billion?
Yeah.
While the American EV industry suffers, Chinese electric vehicle giants enjoy government subsidies that give them, at times, dangerously good pricing power.
Dangerously good.
Yeah, dangerous to who? Chinese EVs go for unbelievably low prices, and while they're not allowed to be imported into the United States, the low pricing has made it very tough for American EV makers to compete elsewhere in the world. Even long-term American ally Canada decided last month to allow Chinese EV imports.
Well, I'm glad that America's calling Canada a long-term ally now and not 51st state or worse.
Well, I'm getting this out of Gizmodo. I don't think that's how Donald Trump would refer to them, but
yeah,
bunch of commies is probably how he'd refer to them. So I did a deep dive on Ford on episode 6 of this show back on the 21st of May 2025. The share price is up 30.7% since then. So
pivoting's good.
It's done okay despite all of this. That's even taken into account this new loss announcement. They were at $10.80 when I talked about them. They're at $14.12 at the moment. So, yeah, it's okay.
Oh, yeah. And for a large cap company, it's pretty good, really.
Everyone told me I was crazy when I talked about that one back then.
Too much debt.
Yeah, 30%, less than a year, not too bad. Looking at the other companies that we've talked about over the last year on the show, Zim Integrated Shipping was the first we did back in March of 2025. It's up 23% since then. I'll do them in episode order. CX, Chemex is up 122%. DAC, Danaos Corporation, big Greek shipping company, up 31%. Canadian Imperial and Bank of Commerce, speaking about their great ally, up 50%. NL Chile is
Wow.
up 6.3. Ford's up 30. IHS Holding up 54. Jackson Financial up 37. Oryx Corporation up 73. Precision Drilling up 82. POSCO Holdings up 35. ZEP Health Corporation up 682%. Sasol up 59. Bausch Health is down 5. Seneca Foods up 25. Grey Media up 6. Titan Machinery down 0.1. Kimball Electronics down 15.9. Suzano up 15. Methanex up 22. Community Health Systems up 13. Calmain Foods down 12. Dausch, which was AXL, up 17. American Airlines has gone nowhere. Topgolf is up 18.8. PG&E is up 15.9. Korea Electric Power, doing another Korean company today, it's up 28%. AirCap is up 14. Vale is up 29.1%. Ziff Davis is down 16. AMC is down 20. Ziffer is up 6. Controladora Vuela Compañía de Aviación is up 6.6.
Is that the bad bunny of our portfolio?
VLRS, the Bad Bunny?
Yeah.
Why is it a Bad Bunny?
Well, he went on the Super Bowl halftime and sang everything in Spanish.
Oh, God, I didn't even make that connection. I'm so out of the loop on Super Bowl halftime shows. I watched the Prince Super Bowl halftime show from 2007 last night. That was pretty good. AMTD is down a little bit.
That's when it rained, wasn't it?
It did. It's raining, and not only is he playing guitar and singing, but he has two dancing girls in stiletto heels dancing with like an inch of water on the platform. I'm like, Mr. Chrissy, how is that not a health and safety risk? Anyway, the deep dive stocks are doing pretty well. Let me just also talk about the portfolio while I'm here. The actual QAV America portfolio. Last week when we talked about it, it was up about 100%. As of today, it's up 101.36% since inception, which is September 23, versus the S&P 500, which is up about 50% over the same period of time, 53, 54. So doing about double market since then.
And no gas giants to be seen.
Yeah, I wrote an article last week sort of comparing astrophysics to value investing, and I said that we tend to invest in large planets, companies with a lot of mass, a lot of gravity being cash flow, mass is cash, not gas giants that are all hype and speed and momentum and shiny and look pretty, but don't actually have a functioning ecosystem yet. Yeah, we don't have any gas giants. In the last, let's see, year to date, that's not a very good analogy, is it? The last 12 months we're sort of neck and neck with the S&P, around about 20%. But, the last, we'll say 3 months, we're up about 25% versus the index up about 1.5. Actually, we're 26.5 versus 1.5. So it's been a really good, it's actually just since the beginning of the year. Since the beginning of January, which is, I know, just a month and a bit now, 6 weeks, we're up 23% in 6 weeks versus the S&P 500 negative 0.14%. So things are going well. And one of the companies that's been doing well is in my news. I've did a news report this morning of some of our stocks. Banco Latinoamericano de Comercio. It's the other bad bunny in our portfolio, BLX, reported record earnings for 2025 with significant growth in net income and portfolio alongside a strong fourth quarter performance. 2025 net income increased 10% year over year to 227 million. Fourth quarter net income of 56 million, marking one of the strongest quarters in their history. So good on BLX. What else have I got? Oh, Renaissance R&R. They're also in our portfolio. They're up about 15%. They said that their reported earnings exceed analyst estimates, indicating a positive operational performance. 29.6 year-on-year growth, they reported. So, yeah, that's good. Jackson Financial has formed a long-term partnership with TPG that includes a significant equity investment. They're going to make a $500 million common equity investment for roughly 6.5% ownership. So Jackson, I mentioned before, we did a deep dive on them back in June of last year. They're up 37%, and we hold them in the portfolio, and they're up 25% since I added them. The second time I added them back in September last year, then sold them within a week, and then added them back in August of 2025. And yeah, they're up 25, 26% since then.
We went back to Jackson.
Yeah.
We got married in a fever. Hotter than a pepper spray.
Well, I think the reason, I don't know what that is. I think the reason we sold them.
Jackson.
Yeah. I don't know what you're going on about.
We were just talking about Walk the Line in the Australian show. That's
it's a Johnny Cash song.
With June Carter Cash.
June Carter Cash. She was great. Loved her voice. Yeah, I think when we were working out some of the bugs in our process, our QAV process for the American market, we were not including stocks that had a low Z score, and then we decided to ignore the Z score, the Z1 score.
Yeah.
And Jackson had a bad Z1 score, or like actually looking at them now, they have a non-existent Z score, being a financials company.
Mm-hmm.
Anywho, so that's a bit of the news from around the stocks in the QAV universe in the United States, Tony, which leads me to my pulled pork, my deep dive for this week, which is another one I have not added to our light portfolio yet because I wanted to talk to you about it because like some of the ones that we've done recently, it's a bit of a worry.
Really?
Oh, yeah.
All right, tell me about it because it looked good to me.
Did it?
I had a look at
Okay.
it. Yeah.
Well, this is a company called Shinhan. Shinhan Financial Group. Korean. Started out of Japan, funnily enough, but it's a Korean bank with a bit of a turgid history. Not...
Why am I shocked?
Yeah. Yeah. Surprisingly, for stocks that we do on this show. So SHG goes back to 1982, founded by a gentleman called Lee Hee-gun and a group of Korean-Japanese businessmen. It was South Korea's first bank built entirely on private capital rather than government banking. 1982.
Right. Yeah.
And I thought, that's a bit late, seeing as the country was sort of quasi-founded during the Korean War, or leading to the Korean War, really. So early 50s. And so I did a little bit of a deep dive on that. So it was pretty much a command economy for the first couple of decades. As people may or may not know, everyone thinks of North Korea as being a dictatorship. What a lot of people in the West don't realize is that South Korea was a dictatorship as well for the first 30, 40 years. And now it's just very, very corrupt.
Says you.
Oh, and says the people who just took the last president to court, he was just found guilty of fraud. And I think every one of their presidents or prime ministers in the last 30, 40 years has either gone to jail for fraud or corruption or committed suicide while on charges of fraud and corruption. It's not just me. It has a lot of problems.
Okay.
But yeah, for 20 years leading up to Shinhan's founding, the South Korean government owned all the banks, staffed them, and used them as basically their personal economic steering wheel for the South Korean economy. Private banking door was locked. And then they had like a brief experiment with private banking in the late 1950s, but that ended in a military coup when General Park Chung-hee seized power in 1961. We talked about him in Korea Electric Power, that episode, because he was the guy that built KEP, or the precursor to that. He apparently viewed the private owners of the country's commercial banks as dealing in the illicit accumulators of wealth, was, I think, a term that he used.
was legitimate.
Yeah.
He was the
legitimate general. Yeah, they were illicit. So he basically renationalized the entire banking sector, and it stayed that way until it sort of started to loosen up in the early 80s.
Well, don't forget too, Cam, I don't know if it's a coincidence or not, but Australia opened up its financial regulations around that time as well. Like, would have been Keating and Hawke, so early 80s. We allowed foreign banks to take out licenses. We floated the dollar, a few other things as well. So we opened up our banking system to competition.
The Commonwealth Bank wasn't privatised until the 90s?
92, yeah.
Yeah, right. Yeah, fair point. The other complicating factor in South Korea is the chaebols, the big family conglomerates that run Samsung and LG, etc., etc.
So how do you pronounce it?
I don't know. I have no idea. I did look it up.
I just thought it was a different version of cabal.
Cabal. Oh, yeah, you're probably right. Yeah. Chai meaning money, bol meaning faction. On the model of zaibatsu, Japanese zaibatsu. I don't know my what do you call those pronunciation things?
Language, speech.
Oh, aren't you clever? Aren't you funny? Aren't you hilarious? You know, where I'm gonna ask Gemini now. You've done it.
You can ask me. Just make it clear.
How do you pronounce?
No wonder you can't get a straight answer out of Gemini. You blame Gemini. I got this out, but it was all wrong from AI. Meanwhile, AI is scratching its head.
Dear me. Dear me.
J-Bowl, we're both wrong. Okay.
Yeah. That's how they said most English speakers pronounce it J-Bowl, but it should be more like a Shay Bowl, which is pretty much what I said the first time. So we went down this whole thing for Shay Bowl. Yeah, they were concerned that there was just going to be used, if the show bowls got hold of them, they'd just be used as private piggy banks. So in 1982, they started to loosen it up a little bit. Shinhan Bank was established by a bunch of Korean expats that had made a lot of money in Japan, like the Korean diaspora that had gone to Japan, I believe. So anyway, it was set up, and it was partially owned by the National Pension Service, owned 8.04% of it, still do. And today, BlackRock own 5.65% of it. The chairman is a guy called Jin Ok Dong. He's currently under a lot of intense pressure to do what they call a value up, which I'll get into in a moment. There's another issue, like I mentioned to you in our Australian show, digging down into this was brain-numbingly confusing. There's a whole bunch of issues when we're trying to look at Korean companies that are dual listed and listed in the US. There's the whole ADR issue. There's the value of the Korean won, the exchange rate. It's at a 17-year low at the moment. And then there's also this issue of deliberately depressed valuations, because there's a 60% inheritance tax in South Korea. So apparently a lot of the companies, the families that have a lot of money tied up in these things and have some parent control, want to keep the value of them low, so when the family members die, they don't give it all up in tax. Anyway. The core business is, basically they're the financial toll booth for South Korea. These guys are huge. You do anything financial in South Korea, you're probably dealing with Shinhan in some way, shape, or form. Everything from credit cards to corporate factory expansions. They are a massive, massive enterprise, and they also have a global footprint too now. They're quite big in Vietnam, Japan, and Kazakhstan. They are the first Korean bank to hit 1 trillion KRW in annual overseas profit. That sounds like a lot, but when you convert it to US dollar, it's not that impressive. Where's the exchange rate? I didn't write it down here, but it's like 0.000. Oh, there it is. No, that's something else. It's 0.00067 of a USD, I think, for every one won. But still, they're doing very, very well in that front. Very big business. 4.97 trillion KWON profit in 2025. I'll get into the numbers a bit later. But got some problems. The dirty side of it, Tony. Where do I start? The KFTC, which is not Kentucky Fried Tasty Chicken. I thought it was like the Korean.
Finger-licking?
Yeah, I thought it was the Korean version. Yeah, Kentucky Fried Tasty Chicken. But no, it's the Korean Fair Trade Commission in January of this year declared that the Korean banking system had been operating as a coordinated cartel. They slapped the big four banks with a combined KRW $272 billion fine for colluding on loan-to-value ratios between 2022 and 2024. Bank officials allegedly exchanged over 7,500 sensitive data points via shared Excel files to make sure that their lending limits were perfectly aligned. By coordinating how much they were willing to lend against a property, they eliminated the need to compete for customers. If you were a home buyer in Seoul, you weren't shopping around, you were walking into a preset trap. The KFTC estimated this coordination allowed the banks to generate 6.8 trillion won in excess interest income. Shinhan wasn't the worst offender here. The worst offender was Hana Bank, and Shinhan followed second. Hana Bank got a fine of 87 billion won, and Shinhan's was 63.8 billion won. So, we like to look for businesses with good, honest management that are doing a good job, keeping their nose clean, Buffett and Munger style.
Yeah.
This is...
Well, Buffett liked a good monopoly.
Well, this is a oligopoly. There's four of them. But yes, also a bit of a kleptocracy by the sounds of it. And this isn't their only scandal. They've got two other major scandals that I came up or found out about. This relationship between them and Hana Bank is interesting. They're kind of frenemies who sue each other. There was a thing called the Lime Asset Management Scandal, which was a $1.6 trillion KRW Ponzi fraud that saw both banks act as distributors, but Shinhan Securities was the prime broker, and the other banks blamed them. And then on February 5th of this year, like a week ago, the Seoul Southern District Court ruled that Shinhan Investment and Securities had to pay $36.4 billion in damages to Hana Bank because Hana Bank had already been forced by regulators to reimburse its retail customers for mis-selling fraudulent funds. So then Hana turned around and sued Shinhan to claw that money back. Hold on, we committed a crime and you helped us, so we're going to sue you for helping us commit a crime. And they were also collaborating on the cartel. So they're suing each other. They were sharing data to rip off customers, ripping off customers left, right, and center.
Well, all I can say is I think the what's it called? The Korean finger-licking good regulator should it should be exported to Australia and the US. And
Yeah, well, they're actually
get
regulating.
more of the same activity.
Yeah.
Yeah, they're actually regulating.
Yeah.
Yeah.
Congratulations to the KFTC.
Yeah.
And wait, there's more, as Steve Jobs liked to say. Also, in January of 2026, so this is all in the last month, these stories. This is in the US. A lawsuit was filed in the Southern District of Florida against the M360 CRE Income Fund. So this was a failing real estate fund that was failing back in 2020 when the US commercial real estate market was wobbling as a result of COVID. And Shinhan was allegedly allowed to redeem $151 million secretly at full valuation, while smaller retail investors had their redemptions temporarily paused and then dropped by over 67%. So the lawsuit claims that Shinhan walked away with its principal intact, and plaintiffs are calling that preferential treatment and securities fraud. So they've got those three things going on right now. Then in 2024, there was another story. Markets were sort of having a mini crash. A team at Shinhan Securities ETF department lost 130 billion KRW, about 95 million USD, on unauthorized futures trading. Instead of reporting it, they allegedly engaged in ghost trading, creating false swap transactions to mask the deficit, which went unnoticed for over 2 months, only surfacing during a quarterly audit. So lots of shonky, shady stuff going on at Shinhan. The Shinhan
Allegedly.
Shonky, shady trading bank. Allegedly. Well, some of it's more than allegedly. Some of it they've been fined, and some of it is allegedly. Okay. Yeah. So this is why I hesitated before adding them to.
Really? Have you Googled any of the banks in Australia recently, or Googled any of the banks on Wall Street recently?
I know.
Gosh.
You know, we look at the numbers.
Correct.
Some more on these guys. They recently sort of got rid of Shinhan, their Shinhan AI subsidiary, which is probably a good move. And so, yeah, anyway, that's it. Now, then we've got this currency drag thing. So the Korean won has hit 17-year lows, as I mentioned before.
Mm-hmm.
And I was trying to work this out. So like the whole ADR thing still does my head in.
Yeah.
And how
I agree.
there's some sort of arbitrage thing going on between shares and listed on the New York Stock Exchange and the Korean stock and ADRs, and it's too complicated for me, Tony. I spent hours trying to understand this, and my brain just melted in the process. But for whatever reason, even if the shares on the stock exchange go up, if the won falls, it can have an impact on your ability to, certainly the dividends that you are going to get paid, the yield from it, but also something to do with the value of the shares can be impacted by the fall of the won.
Oh, yeah, definitely. Well, I don't know. Without going through the balance sheet of the bank, I don't know whether a falling one helps them or hurts them, because if they're making loans, like you said before, which I also found out, they're a big player internationally. So currency is going to be mixed.
Yeah.
A mixed bag right across their portfolio. So going up and going down. Mainly big banks would have it all hedged anyway, but it's more around what's happening to their profit when it repatriates into US dollars or Australian dollars or wherever else it's being bought. And what people think is going to happen to interest margins in Korea if the dollars or if the won's devaluing over there. Like we've seen the RBA, or the Reserve Bank in Australia, raise interest rates for the first time, and that's coincided with our currency increasing.
Yeah.
The US is going the reverse way. It's dollars devaluating, and it's likely that they'll cut interest rates over there. So with banks, generally, the general rule of thumb is if interest rates are increasing, the banks do better. They get a better margin,
Yeah.
better spread on, what they have to pay out in deposits and what they can borrow for.
Yeah.
So doesn't always work that way, but that's a bit of a rule of thumb.
Yeah.
Yeah. So I don't know how I'd have to go through and look at it almost line by line to work out whether you would think a dropping currency in Korea would mean interest rates would be cut, which would hurt their margins, which would depress the share price. But that's a very superficial analysis of mine.
Well, I tried to drill down into why the won is crashing to 17-year lows. And I think it's a combination of domestic political chaos and the Trump tariffs. As I mentioned before, President Yoon Suk Yeol was arrested. He was impeached and then arrested after he briefly declared martial law in December of 2024.
Yep.
Wikipedia says first time it had been declared in South Korea since the military dictatorship of Chun Do-hwan in 1980. He accused members of the National Assembly of supporting North Korea, but lifted martial law after the Assembly passed an emergency motion nullifying the declaration a few hours later. Amid widespread criticism and mass protests, an impeachment motion was introduced against Yoon the next day, though it fell short of the 200 votes needed to pass. Yoon was successfully impeached and suspended from his presidential powers in a second vote 10 days later. Yoon subsequently became the first sitting president in South Korean history to face an arrest warrant, and in January of 2025, the first to be arrested and incarcerated. So there you go. He's currently detained and being investigated for heading an insurrection, and may face either life imprisonment or the death penalty if convicted.
It's a high stakes game, politics in Korea. Hey, when you talk about the currency devaluing, is that against the US dollar or against the Australian dollar or both?
US dollar. Yeah.
Yeah. Okay. Good.
I haven't checked.
Which means it's actually going down a lot because the US dollar has been devaluing against a lot of currencies around the world too.
Yeah. Right.
Which is what Donald Trump's been trying to engineer to boost exports.
Yeah.
So that's not always a bad thing.
So apparently, surprising to me, because I didn't have the impression that South Korea had a stable, mature democracy in the first place, this has shattered its image as being a stable, mature democracy. And big money managers have reclassified it as a frontier-style risk. So that's playing into this, apparently.
Well, Korea does have what they call the corporate governance discount as well. As you said before about the chaebols, however you pronounce it. Chaebols. So I think it's called koretsu in Japan, and it's called something else in Germany. But some countries have this history of families building up a business and then cross-investing it with each other's companies. And then what you find is that's really good, like in a GFC type environment, because large parcels of big companies are held by other big companies, so they don't trade. And so you don't get big sell-offs in share markets. But it does tend to depress things in the good times because you don't see much liquid float in those companies. And as you said before about inheritance tax, the families are going to run the businesses to suit themselves in the main. And so little shareholders may have different interests, so that'll affect things like how much dividend is paid, depending on whether the family wants income or not. It'll impact capital expenditure at the companies, depending on how the families are going. As you said, there are sometimes allegations of collusion because across industries there'll be the one ownership of many companies, and if it suits the manufacturing part of the portfolio to do one thing, it may not suit the banking part of the portfolio to do one thing. And all the cross ownerships will get together and agree not to do it. So, there's all those kinds of things. So if you look across the board in Korea, they generally trade at a lower multiple than US companies. Definitely. So if you take, and Korea's got some big companies, LG and car manufacturers and
Samsung,
those kinds of things,
Yeah.
Samsung. If you look at comparisons to US companies, they trade on much lower multiples, and the bank's no exception. So I don't know what the numbers are, but you'd say a decent bank in the US might trade on 2 times book, 3 times book. I think this company's trading on less than 1 times book. And that's generally because of this cross-ownership of the families in Korea and the corporate governance issues that it raises. So they often see Korea as a value investors, a place where value investors often wind up investing in because of that discount.
Well, you wouldn't be investing in the presidencies because, just to give you an indication, I mentioned it being a mature, stable democracy. Let me run through the list of presidents and what's happened to them in recent decades. So Chun Du-hwan, 1980 to 1988, sentenced to death, later commuted for the 1979 coup and the Gwangju massacre, pardoned in 1997. Roh Tai-woo, 1988 to 1993, sentenced to 17 years in jail for mutiny, treason and massive slush funds, also pardoned in 1997. Kim Young-sam went from 93 to 98, was disgraced. His son was imprisoned for bribery and tax evasion. He left office during the 1997 IMF crisis. Was replaced by Kim Dae-jung, 98 to 2003, disgraced. He won a Nobel Peace Prize, but his 3 sons were all arrested and investigated for corruption during his term. He was replaced by Roh Moo-hyun, 2003 to 2008, jumped from a cliff and committed suicide in 2009 while under investigation for a $6 million bribery scandal involving his family. He was replaced by Lee Myung-bak, 2008 to 2013, sentenced to 15 years for bribery and embezzlement, notably involving Samsung, pardoned in 2022. Was replaced by Park Geun-hye, 2013 to 2018, impeached and jailed, sentenced to 24 years for the Choi Soon-sil influence peddling scandal. She was pardoned in 2021. And then Yuk Sun-yeol, he was the first sitting president to actually be impeached and jailed. So,
They seem to have a stronger Supreme Court over there than, say, the US does. A lot of those scandals, you could say, have happened before in history in other parts of the world, and they generally slip under the radar or get off without any sort of prosecution at all, really. Or even if someone does get impeached in the US, it doesn't seem to count for much.
Yeah, and I think it's also part of the sort of political structure of South Korea. You have the presidency is pretty much an imperial presidency. Like, they have immense power over the bureaucracy and the economy. It's like a winner takes all kind of deal. And then you've got the chaebols participating in all of that. And there's sort of a tendency to criminalize previous administrations, sort of a retribution cycle that they have over there,
Right.
Combined with a public bloodlust for justice. So, I think kind of where the US is heading, they're sort of heading down that South Korea model. Reminds me of Sulla and Marius in Rome. We just behead our enemies and let the blood flow in the streets. Anyway, so that's South Korea's political climate. Then you got the tariffs that Trump's put on them. I think his reciprocal tariff was originally 25%, negotiated down to 15%, but then last month he said he was going to put it up to 25%, which sent the won into another tailspin. Then you've got a lot of capital apparently flowing out of the country because of the Korean discount. It's sort of hampers, goes back to what you were talking about before. A lot of the retail investors are looking outside of Korea to invest in overseas companies. Then you've got the interest rate gap and the Korea discount that you talked about. And then you've got the inheritance tax that I mentioned and how that plays into keeping prices down. Then there's this value up battle that I mentioned before. So to sort of combat this inheritance tax thing where people are trying to keep the values of companies down, the government is pushing through this intervention to basically force companies to allow the shares to reach a real value, like to normalize their value. And they're doing that based apparently on something that they did in Japan. It was a direct copy paste of the Japanese strategy.
I was going to say, it reminds me of what Japan has done in the last year or so.
Right. And apparently in Japan, they realized if they just publicly shamed companies that were trading below 1.0 book value, 1 times book value, you know, it was a matter of face. They would start buying back shares or raising dividends, and it worked in Japan. So Korea's running the same play, basically. They have a 3-part mechanism to do it. They have the carrot, the stick, and the engine. The carrot is you will if they significantly increase dividends, they will see their corporate tax rate drop by 5 to 10%. And individual shareholders can get reduced withholding taxes on those dividends. The stick is the Korea Exchange has created a VIP club index, the Korea Value Up Index. If a company's big and profitable but doesn't return enough cash to shareholders, it gets left out. If you get snubbed by this index, it's a reputational blow to the CEO, so they all want to be part of the Value Up Club. And then the engine is the National Pension Service that I mentioned before, which is the world's 3rd largest pension fund. They've been told to use the Value Up Index as the new benchmark. So billions of dollars of forced buying is flowing into the companies that are part of the Value Up Index. It's pretty smart, you know.
It is very
smart play, right?
Again, I love these regulators in Korea. We should get them over here. Can you imagine if the ASX did that?
Oh, some of our prime ministers going to jail or having to commit suicide? Fantastic. I can think of half a dozen.
Like the ASX naming and shaming companies and getting a Value Up Club going.
Yeah, the Value Up Club.
By the way, did you see the ASX CEO got sacked last week or left last week?
Yeah. So anyway,
great idea. Love it.
Shinhan is trying to be the valedictorian of the Value Up class. So
the biggest value.
Yeah.
The biggest value in the VIP club.
Yeah.
Biggest V.
They're trying to be good students. They're aggressively buying back shares so they can stay at the top of the Value Up Index. But, you know, so there's it's a war going on between the government and the showballs, apparently, that are the big investors that want to keep this down. So, you know, whether or not the government wins or the showballs win, and we have more presidents committing suicide or going to jail for trying to do this, who knows? But as we've seen with the 28% increase in Korea Electric Power since we talked about it, which I assume has something to do with this Value Up play. Also, just the basic economics that we talked about on that show. They'd been forced to keep energy prices low and they were reevaluating, et cetera, et cetera. But it's all interesting. It's very complicated. You know, it's like all of these stocks that we do in the American market, a lot more going on than there is in your typical Australian business.
Yeah, however, it does remind me of Australian banks. I mean, we've got 4 banks. Korea's got 4 banks.
Big 4.
This is, depending on the metric you measure it, this is number 1 or number 2. So it's like the Commonwealth Bank in Australia, and probably something like JP Morgan Chase in the US. Does everything: retail banking, credit cards, business loans, wealth management.
Everywhere.
Yeah, it's a one-stop shop. Yeah. And a large market share.
Yeah. And unlike Australian banks these days, more active in international markets.
Yeah, right.
Australian banks have struggled to make much of a play overseas. So I did the amended scoring because they report in Stockopedia in won. So I had to adjust some of our numbers, particularly the EPS and the future EPS. They came down a little bit in score when I did that, but not too much. So basically they had a QAV score of 0.24. They were sort of top 10. A lot of the ones in the top 10 this week we already own or already talked about. They were still on the list, including some of the ones we've talked about in recent weeks are still up at the top. So 0.24 average daily trade is, what's that, 16 million, 17 million, something like that. Price to operating cash flow 3.26.
That's good.
It's good. It's not as low as some of the ones that we've had recently, but it's, it's in the middle of our
It's good.
thing. It's pretty low.
For a big bank operating in a near monopoly, able to shrug off government fines and legal challenges and all the rest.
Yeah.
And you get it for 3 times cash flow. That's incredible.
Yeah. Yeah. Good point. Stockopedia give them a quality rank of 57, so we only score over 60. They don't score for that, but they do score for stock rank over 90 and an F score over 4.5. It couldn't score them for our IV number 1 after I readjusted. The IV number 1 was 33.9 and the share price had closed at about 69.83, so they're much higher than our IV number 1. But our IV 2 adjusted for the exchange was $71.18. So it scored for that, but not for double that. Price is less than book. Price is less than book plus 30. The price to book is, what did I say? It's like 0.85 is their latest price to book.
Yeah, right. So trading at less than 1 times book.
Yeah.
You talk to anyone in Australian banking circles and they will say, if you can buy a bank for less than twice book, do it. It's a great deal.
Really? Okay.
Mm.
So I scored them for those. Not a new 3-point upturn, but the prop CAF is obviously less than 7. Forecast IV is not better than double price. Yield is not higher than bank debt. The PE is not less than the yield. Growth over PE is not greater than 1.5. But I ended up with a quality score in QAV of 77% after the adjustments. 10 out of 13 they scored for. And as I said, a final QAV score of 0.24. So messy, very messy, Tony, but cheap. Messy but cheap. I've married a few women like that over the years, but I thought I'd learn my lesson.
They weren't Korean, were they?
They weren't. No, I've had a couple of Korean girlfriends, but didn't marry them, no. So what do you think, Tony?
I like it. I love it. It's great.
Really?
A lot of value investors will look for what they call a catalyst before they invest. So they, as a way of protecting them from buying stocks which are cheap for a reason, they'll say, I know this is cheap. I know this is changing. That's the catalyst. Now it's time to invest. And I think what you've described as the value club or the value up process is exactly that catalyst. It's a great time to invest in a company like this, and possibly even all Korean large companies as well.
Wow. Okay. Well, there you have it, folks. Tony gives it the thumbs up. I wasn't sure about this one. I thought this is the one he was going to hit on the head. No, too dirty, too messy. But
not at all.
I tell you what, if you look at their share price, it's been going great guns, actually. It was trading as low as like $32 a year ago. Now it's up around $70. So it's
there you go. I reckon that's the value up.
Yeah.
Change.
Yeah. But still coming in as very cheap on our buy list,
Correct. Yeah. The other thing I should also mention too is that Korean companies trade at a discount because of North Korea. So they're seen as, a potential, something's come out of left field potentially to hurt the economy or worse. So it's almost trading at a war zone discount. Not quite in South Korea, but it's seen as having a level of hazard investing in Korea because of that.
Interesting. Okay. Well, that's it, Tony. That's all I have. We did a veil of Robert Duvall on the other show. I guess we can mention that briefly. It's great American actor. Sadly, well, not sadly, he was 95. Like
Great life.
Great life, great career. As I said on the last show, I looked at IMDb and he was working up until a couple of years ago. He was still working in his early 90s. He's one of those guys that, you could put in the crotchety old man role, like a Gene Hackman or, I don't know, whoever else. Lots of Laura Dern's dad, Bruce Dern, all of those sorts of guys.
Bruce Dern, yeah, exactly. Yeah. I think he was in the crotchety old man role, wasn't he? Was it Stone Lines, the one with Michael Caine, where they used to sit in their front porch and shoot at anyone who tried to visit them?
I don't know that film. That sounds good.
I think it's Duvall. That's good. Yeah, it's a good one.
Yeah, and like Clint. Yeah, there's lots of crotchety old man roles, I guess, in Hollywood that he got his fair share of. But yeah, what a tremendous career.
Great actor. Great Santini. Kilgore in Apocalypse Now. The lawyer in, what was his name, in Tom Hagen in The Godfather.
Yeah.
I mean, lots of classic roles that he just made his own.
Yeah. Well, that's it, Tony. We'll see what happens this week. But look, I think it's fair to say, based on the pulled porks that I read out before and our portfolio, that QAV works in the US market.
And probably the Korean market too.
Yeah.
Yeah, no, it does. I agree.
I mean, I know before we started the North American show, we were worried about, the accounting systems being different from the Australian and the reporting schedules a bit different and this, that, and the other. But at the end of the day, it's still finding stocks that are generating cash that we can buy cheaply. And that
basic business sense.
Yeah, basic investing. We're finding companies with mass, with gravity.
The only question I'd still have unanswered, and I don't know the answer to, and it'd be great if someone could, write in from the US, is whether these overseas companies are causing a problem and providing a valuation discount as well, because people just either can't do it from a tax point of view, or there's some other roadblock stopping them from making investments in ADRs. Like, maybe pension funds don't allow it. I don't know. We might even, just flag them. Like if we have a US domiciled company, flag it in the portfolio or something like that, so we can see if they perform differently to the ADRs.
Yeah, I'll make a note of that. Good job.
All
right. Well, thank you, TK.
Okay.
Thank you for giving that one the thumbs up. I'll add that to the live portfolio this week and we'll see how it goes. Have a good week.
Good. All right. Cheers.